See how long it takes for my internet to die today. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I'm out of a couple of the consumer staples that I was in, Coca-Cola and Walmart, but I still got some XLP. I'm out of Snow, which I was long. And I thought one other one, I can't remember. But I'm in SoFi and Oscar as new long positions. Alrighty. Really sleepy day today, guys. So not a whole ton to talk about. If you guys have questions, though, like always, I'm happy to stick around all night. But otherwise, I think this is going to be pretty quick and easy. SPYs are down 0.2%. Qs are down 0.4%. The IWM is flat. TLT was notably up a lot. Metals took a little bit of a hit. Silver's down 3.5%, but the chart, it doesn't change the chart. It's actually an inside day. And notably crypto weak again today, off of lows, but crypto, out of everything that was the most super oversold on Thursday with the Thursday afternoon capitulation, crypto is probably bouncing back the worst. Almost everything else has gotten to or exceeded its ADMA on the daily chart in the bounce back by this point, and crypto has not. It's the worst. I don't have any more crypto long exposure. It was like a quick Thursday into Friday trade for me. Ethereum down 5.25% today, so crypto looks pretty terrible. Morning meeting. Well, first of all, 5-minute chart, nothing to talk about. Flat, and then we got a little bit weaker in the afternoon as some of the Iran headlines hit. I think we had an Iran headlines somewhere around 1 o'clock, and then right into the close, we had another headline that the United States is considering seizing Iranian oil tankers. So that hit us down a little bit further. From a market big picture perspective today, once again, we're looking for a less is more approach, and on top of that, we had a flat open. There was no gap. So just very little advantage right now at the bigger picture index level, in my opinion, because we have a bit of a mixed message. Again, flat open, so nothing from the gap to really assist us. And then the SPYs look like they're on the verge of a breakout. The RSP, the IWM, and the Dow look fantastic overall. And then the Qs look like today would be the day to try to find the pivot high. You had the breakdown, the snapback into equilibrium. That snapback into equilibrium at highs this morning is basically retesting previous support. So the Qs are saying that you should be looking for the short today for the lower high to continue us back down. But the other indices are saying the exact opposite, that we are in pretty much full-on bull mode here, and you should be buying those breakouts and buying continuation. So again, a very mixed message. And I guess with all the dispersion that's been taking place, it maybe would have been profitable to just say, hey, I'll short the Qs and I'll buy the RSP as the trade setup to look for. But broadly speaking, for me this week, for where we're trading right now, I just still am lacking conviction. And I'll say that every day, no matter how boring it sounds, until I've got more conviction. And, my mentality wants to be bearish here, but the technicals just aren't fully confirming that. So that is what I want to see in order to pick that up. And instead, I've kind of been running, a book that's got long and shorts on at the same time and managing positions on each side of the market to hopefully make some money off of extension retracements, relative strength, relative weakness, to some degree even ranges. So that's kind of been the big focus for me. And we've got the big non-farm payrolls number tomorrow, which maybe can wake things up a little bit. As far as individual stocks go today, probably my best call from the morning meeting was SanDisk short. I called for it yesterday too, but today was the day that it really worked. I discussed this wedge. Technically, it's a bull wedge, but I find that bull wedges like this after a parabolic move have honestly at least as high of a probability of breaking down as they do breaking up. So really thought that we could get some downside continuation in SanDisk today. It was a little tricky. You had to be able to snack some stock right away. We talked about being short more or less versus 580. And if you were able to get that, great. Probably my worst call from the morning meeting today was going long Google versus yesterday's high. I thought if the market held in, versus yesterday's low. I thought if the market held in, that Google's relative strength, that this could be like a low here that then breaks this thing up. That did not work at all. Google got smoked. I guess, there was a headline out on fears of their debt offering, but that debt offering's not new at this point. So whatever, they always got to attribute it to something. They wrecked this thing right away in the beginning of the day, and then it put in a low, but it never was able to fully recapture that 320. So I do have a position in Google, and we will see if Google can get back above 320. What else? I traded Netflix today, but it ended up failing. Bought this kind of early opening momentum here to the upside when we saw it coming in with great volume on the first 5-minute bar. To me, it looked like maybe it was breaking up out of this descending channel for the first time in a long time. So, tried buying some of that in the beginning of the day, added a little bit, got a move, and then got stopped out on the way down. Is what it is. What else? SoFi, started a little SoFi position. Don't love my entry point on this, honestly, but wanted to just scoop up a little bit anyway. It's going to be a bit of a bigger picture trade for me is kind of my current plan. And then, we talked about Oscar on the earnings report, but it closed terribly. But I'm giving this a little bit of space. We had talked about long versus 1275 in the morning meeting. They hit it down very hard right into the close, almost into that level. But I'm keeping a little bit. Potentially going to do it for a little bit of the bigger picture also. My fundamentals guy likes it. So, we'll see. It was an interesting report because they really missed on like EPS and revenue, but the revenue guidance was excellent. So that's what enabled it, I think, to boost up a little bit in the beginning of the day. And that's all I got. So I really don't have anything else to talk about. Like I said, just a very, very quiet, sleepy trading session. So if anybody has any questions, I'm happy to answer them. Here's one from Robert. I'm holding TQQQ swing from Thursday. I'm assuming you mean swing long. I'm assuming you mean swing long from Thursday. Today, as the daily chart came to the EMAs, I expected a boring day. Would you say this kind of day should be a good day to do cash flow strategy, expecting the market to go sideways, find a way to buy every 20, 30 cents in the TQQQ? I didn't do that, but I'm trying to build a playbook here. So the short answer is yes. I think that when you can find things that are going to be range bound, that is when my cash flow strategy actually pays best. Because everyone's trying to battle to make money long, make money short. The market's frustrating everybody. It's shaking out to the upside. It's shaking out to the downside. You're not getting shaken out. You're just working ranges and banking cash flow kind of based on all the intraday movements. So the short answer to that is yes. But the bigger answer to that is I don't think that you can just pick and choose days to do that. I think that when you enter the position, you're entering the position initially that has a game plan already built in to do some degree of that cash flow strategy. So I would argue that if that was the plan and you've been long since Thursday, you should be doing it since Thursday, which means that you would have lost a lot of the position on the way up. I've gone through the math on it in other afternoon meetings, so I'm not going to do it again today unless you really, really want me to. Then I can try to go through it. But there's a trade-off when you implement that strategy, right? If you think, I'm just going to make up some numbers really simply here. If you're long TQQQ from 48 and you think you can go to 52, yeah. If you're long TQQQ from 48 and you think you can go to 52, and it just goes straight up there in a vertical line, and you're attempting to implement that cash flow strategy, it's going to cost you money. You're going to make less than you would have if you just held the position looking for your target. But if your game plan was for it to get to 52 and it gets to 52 but it goes sideways for 3 weeks, just being extreme with my example, and then goes to 52, you're going to make significantly more by having done that cash flow approach before it got to the target. So yeah, I hope that helps. Over in the YouTube, do you look at pairs like the US 30? And if so, what are your thoughts as it's so bullish the last couple of days with no resistance at these new highs? Do I look at pairs like the US 30? I don't know what you mean by pairs in that in the example of your question. What I do look at is different indexes to get different pieces of information, right? And that's what you'll see me do in the beginning of almost every morning and afternoon meeting. I don't look at futures. I mean, I do when I wake up in the morning because I want to see kind of where they were trading overnight. But otherwise, between 4 a.m. and 8 p.m. Eastern, I don't need to look at the futures because I can look at the SPY instead of the ES, and the chart's going to be the exact same as one another. So I mean, what I do is I look at each index to get information from it, and that's why I don't have strong conviction right now, is because I've just got different messages. I don't really care about the Dow at all, to be honest with you, because there's just not enough stocks. But I certainly care about the RSP, and that RSP chart's phenomenal, and the IWM chart's pretty darn good. And the SPY chart looks like it really wants to maybe go for a breakout, but it's a little bit more neutral. And then the Qs, on the other hand, look bearish, look outright bearish. So it's just a mixed message from the market, and I'm waiting for more information. Option swing asked about silver yesterday before it dropped. I answered the question to the people who were in the VTF because I knew I could answer you directly, but I answered it anyway. Yeah, silver right now is back up in a no man's land here. Big picture, structurally, I like the bull case for the metals. So if I had to be long or short here, I would be long. But from a more trading perspective now, I think that there's not nearly as much edge here. There was edge in the parabolic move for the short, and there was edge several occasions here to go long. Thursday afternoon, you could have bought XLV at 58.50. 58.50. Traded all the way down to 58.50 in SLV. Thursday afternoon. Just incredible. So there's been huge volatility here. And that degree of downside extension, a buy below 60 in SLV on that day, I love. But, now that it's snapped all the way back up into the 70s again here, and it's back into kind of the moving average zone, and there's no extension, I don't see much to do here at this point. So, big picture structurally, I like it on the long side. Smaller picture from a trading perspective, I don't see that anything to do here at this point. From Mike in the YouTube, only caught the end of your last question. When you say cash flow strategies, do you mean covered call? No, that's not what I mean. I have a specific, more quantitative equity trading strategy, game planning strategy that is more focused on cash flow and positions than while you wait for like a bigger picture to play out, is really what I was referencing there. There's other afternoon meetings that you might be able to find where I've gone into like long detail on it, an hour plus. The people who are in the virtual trading floor have access to a spreadsheet where Mike Reed, if he's here today, has painstakingly gone through all of my afternoon meetings to pull out different lessons so people can go back to, let's say, I don't know, November 20th, 2024 afternoon meeting and go to 20 minutes in to be able to, look at that specific afternoon meeting to be able to get that lesson from it. Sorry, hold on. I'm just pulling this up for you. It looks like I maybe spoke about it on October 4th, 2023. Whatever. Hopefully that's not. I hope that's read only. Liam, is that read only for you when you click in it? Or are you able to edit it? I hope it's read only. Because I may have just shared it. Okay, perfect. Perfect. Okay, cool. Back over to the VTF. Answered Robert's question. Sorry, Michael Anthony. I mean, look, you could use the Dow as a trading vehicle. You could trade it, but I don't find that I get any bigger picture information from it. That's all I'm saying. I don't really trade it too often. I do once in a while, but I just don't think that you get any real bigger picture information from it like you do looking at the RSP or the SPYs or the Qs or the IWM. From Robert, that's why I was thinking to try and pick up a day where the market might go sideways while holding a major position in strong last 2 days and turn. Yeah, I think it's tough. I think you got to kind of do it from the beginning. One thing that you might want to maybe try to do is just found a range bound stock that you think is going to stay in the range and try to do it. The problem with that is that you tend to just not get enough movement in those. But maybe you can find a good example where I'm wrong and you can get good movement and it still is in a range. And I honestly ask myself that sometimes too, because it's like sometimes especially if I'm building into something that's counter trend or counter momentum, like the software trade recently or the consumer staple trade or the silver trade, it's like I'm implementing that cash flow strategy. And I love doing that even when trades go against me, because as trades go against me, it's reducing my P&L loss, basically, that I would have otherwise. But at the same time, I'm like, why am I implementing this in these stocks that are moving crazy and I'm counter trend and, it can run against me? Shouldn't I just only look for range-bound stocks? But the fact of the matter is you get the most volatility in those things that are moving really big, and it's the volatility that also pays you from those increments and from that strategy. It's the beta. From Liam, curious about your thoughts on the Amazon chart. Bought it late after hours on Thursday. Risk off on the position with an average of $201.50. Maybe a bit of time correction looking. Objectively, not a great report. Thinking the 200 is major support for what it's worth. Game plan is the 8 on the daily. Just not sure the appropriate game plan. Is this just kind of a trade that you don't really look at after you have the risk off? Yeah, it's kind of a trade that I just don't really look at after I have the risk off. Either get stopped out or the trade works. My thoughts on the Amazon chart. I've mentioned in the last couple morning meetings, I just don't like it in the 210 area, which is where it's been, yesterday and this morning. I just feel like at 210, it was a bad risk reward to do anything new. I still feel that way. It is pretty downside extended, so if you had any market help, this thing could easily get to 215, 217, maybe even a little bit above that. But if you're flat, I wouldn't want anything to do with this. If you're already in it, then you're already in it. You have a game plan, and I would just let the game plan play out. Yep. Anything else, guys? Again, I'm in no rush. It's just it was a really, really quiet day today. Non-farm payrolls tomorrow. Maybe it'd shake things up a little bit. Maybe something goes down with the Iran situation. Could shake things up a little bit. So there's definitely stuff that could get us moving. And we still have this kind of historical seasonality peak of February 13th to contend with. And then February OPEX. And February is the second weakest month of the year historically, but it particularly comes from the last 2 weeks. So we'll see if this February is the same or if this February bucks the trend. I feel like over the course of the last handful of months, we've seen a lot of instances of seasonality, traditional seasonality, not playing out. So we'll see. From Giancarlo in the YouTube, with the markets flat to boring days like today, do you like to range trade? You may have answered that already, but I didn't catch all of it. Yes, yeah, I'm assuming that the YouTube lost me. Unless it's back. Am I back on the YouTube too? And I'm back on the VTF? Wow. Usually I have to reload it all. Yeah, but bottom line is, yeah, I like range trades on range days. You know, that's what you want to do, and I like following the trend on trend days. The hard part is knowing when things are going to be a trend day and when things are going to be a range day. As a general rule in the market, you get much more range days than you do trend days. But as a general rule in the market, I think trend days have a significantly greater ability to create profit for you. You can get significantly better risk rewards on it. But if you can be... Did I, Eddie? Oh, interesting. But range days can be tricky, but for me, again, if you're implementing that cash flow strategy, I'll take days like today all the time. It was boring, it was relaxing, I made a few bucks for myself, I'm green today, and I just sat around and was plugging along with buys and sells in the TQQQ pretty much all day. I mean, you can just see the executions all day in the TQQQ. You can see the executions all day in UPro that I was doing. I'll take this crap all day, because every time, every green dot that you see here is a 20-cent movement in my favor. So for every 100 shares I'm buying or selling, it's every green dot. If it's all 100 shares, let's just say, every time you see a green dot, it just means I put 20 bucks in my pocket. I'll sit here all day and just go, I'll take 20 bucks, I'll take 20 bucks, I'll take 20 bucks, I'll take 20 bucks, and that's it. The problems that you can run into are more if you're trying to do that and things start really running against you. They are either 100 or some multiple of 100, Jim. All right, folks. Is SPX 6700 the next CTA sell threshold? I think we're sitting somewhere a little bit above that. I don't remember the exact numbers that I had seen for the Goldman Sachs medium-term CTA threshold or the Bank of America one, but I know it's sitting somewhere right around this January low and Thursday's low. So that's the area that I'm watching for two main reasons. One, if the market breaks there, it's going to have very large technical significance. Two, if the market breaks there, it's going to have very large market dynamic significance. And last I saw, we would go negative gamma down there too. So I really do think if we break the January, February lows, that we'll see what it looks like when it happens. I don't want us to be extremely extended into it like we were on Thursday of last week. But if we don't have a tremendous amount of extension, like we consolidate and then break or something like that, and you start to lose these lows, you could go into a dramatic feedback cycle of selling. So we have a mixed message from the market, but I'm really, really paying attention to that area. If that area breaks, we're not going to have a mixed message anymore. It's going to be a bearish message technically across the board. CTA sell trigger is going to be triggering. Gamma is going to go negative. Things can begin to feed on each other. And, you got to be really careful. Watch out below. And I'm also looking at that in conjunction with trying to see if correlations increase. Show me the XLP and the QQQ puking at the same time as those levels are breaking. And I think that would be a huge signal that we need to get out of the way on our longs and push the short side. All right, so I'll wrap it up there. Have a